Good afternoon. Welcome to Halftime Report. It's 12 noon. There is a monster rally currently underway. As we speak, the Nifty is up nearly 200 points. The SENSEX is higher by nearly 600 points. And take a look at the performance that we've seen this entire week. After the big rout in October, we've bounced back very smartly. For the week, the Nifty is up about 5.5%. The mid-caps have rallied about 8.5%. Of course, it's courtesy easing bond yield prices in the currency as well. The rupee has depreciated below that 73 mark against the dollar and crude prices, but even Asia is participating. Hang Seng now has a 1,000-point rally. So that should come up for you on your screen. It's at the high point of the day. So after Asia opened up, the Chinese and the Hong Kong markets opened up after their day's break. They're only powering on. So currently the Chinese markets are up 2.5%, while the Hang Seng has gained close to about 980 points. It'll come up for you on your screen. Hi, Nigel.
Well, it's a powerful rally that we're seeing. Rima, now all eyes, the Nifty is at around the 10,560 odd mark. 200 points away is when the 200 DMA comes in. So we'll be keeping an eye out on that mark. Till there, in fact, anything can happen. This market is net short, so even if the buying doesn't come in from the FIs, you can see a bit of a short covering bounce. Already, some of those shorts would have covered out. We are opened up the gap up, and in fact, we're building onto those gains. Breadth of the market splendid. 4 stocks advancing for every 1 stock that's declining.
Okay, we're now joined by the management of MEP Infra. That's the company which is currently on our radar. They have reported a good set of earnings, a 41% increase in the company's revenues. There is an exceptional item, but if you strip that out, then the bottom line is looking quite good. Jayant Maheskar, the chairman of MEP Infra, joins in now. Good afternoon. Thanks so much for joining in. If you could first explain why the construction revenue has halved on a quarter-on-quarter basis, and what can you guide for the full year in terms of the toll revenues as well as construction revenues?
Good morning. MEP has declared its set of numbers for, I would say, Q2 and half year for FY 18-19. As far as the revenues are concerned, the Q2 we have seen, I would say, a little dip on the construction revenue, predominantly account of 2 things. Basically, the Gujarat and Goa sector, or I would say the Ratnagiri, where the company is currently doing HAM projects, has seen a phenomenal amount of rainfall, which actually did not allow the company to go on the construction on those I would say 3 to 4 projects. However, Nagpur is on track. Having said that, as far as tolling revenue is concerned, we had already announced regarding suspension of toll on the Delhi entry points for a period of almost 45 to 60 days, which has resulted in the top line getting shrinked. Having said that, if we consider, I would say quarter-on-quarter as last year, as you rightly said, the numbers are pretty robust. And if I have to give some number, the total tolling revenue over the period, along with the construction, the company should be able to cross the 3,200 mark, which is well within the reachable limits as far as the current next 2 quarters are concerned.
3,200 crores, Mr. Maheskar, for the entire year, right?
That would be for the full year. Okay,
and if you're looking at, you mentioned various headwinds that you're seeing because of heavy rainfall. A couple of toll plazas were closed as well. On a quarterly basis, what kind of run rate should we expect from MEP Infra? And give us a sense of traffic growth. What was it at the half-year mark? What are you expecting for the year?
I think as far as traffic growth is concerned, we are predominantly factoring 2 projects. One is the MCD Delhi project, as well as the Mumbai entry points and the Rajiv Gandhi ceiling, which are the 3 main tolling projects which the company is currently, I would say, working on. As far as growth is concerned, in this year it has taken a little uptake in terms of the traffic growth on these 3 projects. Mumbai has seen a good amount of traction in amount of increase in the commercial vehicles. So the growth, I would say, would peg at around 5.5%. As far as Delhi is concerned, it would be in the tune of around 3 to 3.5%. In fact, the ceiling also would have a similar number of 5.5% as Mumbai is. These are the 3 main projects which I think the traffic growth can be taken into consideration.
Jayant, you indicated that in the previous quarter the performance was impacted because of Ratnagiri and the floods there, even suspension of toll collection at the Delhi entry point. Any such factors would impact your December quarter's numbers?
As far as December quarter is concerned, I feel the company has already restarted the construction activities at all the 6 hybrid annuity projects. The Delhi tolling has commenced on 1st of October. Mumbai also, the tolling on the cars has also started, where it was suspended for the 3 plazas predominantly for a period of 20 to 30 days, where the company has lodged a claim and is in the advanced stage of getting it. So we are expecting actual revenue realization of that claim in this quarter. Having said that, I think we don't foresee any kind of such challenges which we had in Q2 for the Q3 and Q4, which will allow us to go ahead with the desired numbers. Having said that, what we also are in the advanced stages, we have an appointed date for our 4 hybrid annuity projects, which are pegged at, I would say, first to second week of December, where the construction would post-start for these 4 projects, which will get added in the Q4 of the current financial year.
Mr. Maiskar, what's going on with the construction segment? It used to be around 30% of your total revenues. This quarter, it's fallen considerably. And not just that, even if I look at the EBIT performance, it's only 13 crores. Now, normally you do more than 30 crores from that segment out there. Why is that?
As far as construction revenues is concerned, it has got impacted on account of the heavy rainfall, which I mentioned earlier. As far as the EBIT is concerned, I think in a case of, I would say, MEP, the EBIT is considered comparing the tolling as well as the construction revenue. Predominantly, we had started Delhi entry points in the Q3 of last year. If I compare last year with the current year, the EBIT numbers have gone down on account of starting of Delhi entry points, where the revenue is realized ahead of the EBIT numbers.
So you're expecting things to improve in the second half of the year is what you're trying to tell our viewers in short.
Yes, please.
And debt in your books, is there any reduction plan out there? I think there was, one of the rating agencies that come out with the note just a couple of weeks back on MEP Infra. Any update on that front?
As far as MEP debt is concerned, we have a consolidated of around 2,900 crores currently. What we are actively also looking is we have an, I would say, non-binding term sheet signed with Cube, which allows us to, I would say, hive off 6 of our operating assets over the period of next, I would say, 8 to 12 months. Based on the completion dates, which will reduce the debt on the SPV level. Having said that, also we are currently pursuing refinancing the Mumbai entry toll debt, which will allow us to lower the cost of borrowing and also allow some kind of monetization on the existing Mumbai entry debt, which allows us to get good amount of cash liquidity over the next 5 to 6 years, which can be put as an equity in the existing HAM and the future bidding what would happen.
Jayant, thank you very much for your time this afternoon. That is MEP Infra. Optimistic about Q3 and Q4. The stock is reacting positively, now higher by 3.5%. That is the 6-month chart where the stock has been under pressure, losing close to about 50% of its market capitalization. For the day, it's picking up pace. Get into a break. On the other side, Thomas Cook is on our radar. Good Q2 numbers. Mahesh Iyer, the ED and CEO of the company, joins in next.